Hello, you're welcome as we look into the last part of this our trading stuff. It's going to be called trading psychology. Now we know what is trading already. Then what is the psychology? You can search that on Google, but little understanding of it is how to react to market situations, with confidence and the right mindset. That is our major focus when it comes to trading psychology. Why? Because there are a lot of things that is making a lot of traders not profitable. If you do your research online also, you will see that over 80% or 90% of traders are not profitable. Not because there is no strategy. There are a lot of trading strategy. You can check it on Google, on YouTube, all those things, they are there. But why are people still not making money? That's because even when they have their trading, their strategy, their risk to reward, but their psychology may not be intact. That is why we need to understand this particular aspect of trading psychology as it will help us with our trading. Now, what causes a lot of people to lose money? They are in two categories, as per my knowledge right now, is greed and ambitions. What I mean by greed, people are too greedy. They want to make $1 million in a day. If there are two people given an opportunity that can you do so thing to make $1 million in 1 year, and another person is given another opportunity to do something that is very dangerous that can even take his life, but he can make that $1 million in a day. I'm telling you, majority of people want to do that thing that will make them that $1 million in a day, even when it is very risky and also the probability of success is very tiny. People want to do it. Are you getting it? Because of them, should I say greed? It's greed and over ambitions. There's what we call ambitions and there's what we call over ambition. So when it comes to trading, the most important thing that affect traders is greed and ambitions. Now, I'm going to talk about this in three categories. The first one is overwhelming candlesticks and opportunities. What I mean by this is, when you come to a higher time frame, when you are looking at the 4-hour time frame, for example, how many candles you can form in a day in a 4-hour time frame? I've explained this in my previous videos. 6 candlesticks will form in a day for a 4-hour candlesticks. Then how many days are in a week? It's just 5 days in a week, okay? Then just imagine somebody is now using only 1 week to trade. The opportunity the person will trade with is very, very limited. And because of this, there are a lot of people that are even trading the 1 minute time frame. I hope you are getting it. People are trading 1 minute, even some are even trading seconds. See them here now. Seconds time frame, minutes time frame. There are a lot of strategies that work in those type of time frame. But if your strategy works with the higher time frame, just like price action, it works best in higher time frame. Then you are using it in lower time frame because you want to make more money, you want to do more trade, more money. You are going to lose out on trading, and you may even stop trading because your psychology is not intact. Hope you are getting it. Now, when you look at the higher time frame, there's less trading, but less trade does not mean less opportunity. There are some people, what they do is just to take 1 trade or 2 trade in a month, and they are good. Just imagine you are risking 1% on a $1 million trade. All those things. Now do the calculation. What is 1% of $1 million? $1 million. 1% of $1 million should be what? 10% is 100,000, right? Then 1% is $10,000. Then you are doing just 1 trade and you are making 1% in a month. That's $10,000 with no stress, nothing. You are just having your best time. So now think about making 10%. You are making 10% on $1 million in a month. You are very good. That is a lot of money. But some people are just there. They want to double their $1 million in a day or in a week or in a month. All those things is called greed. Now let's take all these things to the overwhelming candlesticks and opportunity. I'm saying That is just the main thing. Overwhelming candlestick and opportunities may just be there. Maybe you have already stuck with, okay, you'll be trading higher time frame. Then by the time you go on social media, you see somebody trading the lower time frame and they're making a lot of money. Your mind will say, okay, let me go and trade it also and do all those things. Now that will take us to number 2, risk reward ratio. When I say risk reward ratio, we have already fixed our risk reward ratio as per this price action that we should not risk, we should be going with 1 to 3 reward, meaning that you risk $1 to get $3. If you risk $100, you get $300. You risk 1,000 to get 3,000, 10,000 to get 5,000, 100,000 to get 200,000, and so forth. Now you have already understand this are 1 to 3 reward, but by the time you go to social media, you will see somebody doing 1 to 10 reward, meaning that this person is risking $1 to get $10. They are risking $10 to get $100. You want to go there and say, oh, well, let me learn this person's strategy and all of those things. But the reality is actually different, because that person may not be trading real account, and even if they are trading real account, the consistency in this trade may not be good. Let me show you an example. Okay, you see on this chart we have the Ethereum USD on the 4-hour time frame. First thing first, price has given us our entry here, using the 21 moving average as we have studied already. Then price also give us an entry using flip. Then by the time you come to it, you see that is our entry. Then price tag us along. When price did that, what are we supposed to do? This is our what? 1 to 3 risk to reward ratio. Okay, but from general study that you have done before, this is our lower low, right? Our major lower low. Then probably this up here is our lower high, as we have studied. So we know very well that when, from all market indication, when price tap into this particular resistance and give us our entry, what are we supposed to do? When we enter a trade here, I'm telling you, in majority of the market situation, price will usually trade from this point, from that our entry, down to this lower low. Hope you are getting it. Now this is where the greed comes in. The people doing the market, they are not stupid, they are very wise. They are setting trap a lot, because now in this trade we see that this trade play out whereby price came to this our flip zone and then gave us an entry. After the entry, you can see how this candlestick, everything they just traded until this lower low is taken out, right? And if we have entered that trade and take our risk from our advisable 1 to 3 risk to reward, we want to take it that, okay, let's take it to this lower low. What are you saying here? You are not saying that in this situation we'll be risking $1 to get how much? To get $7.52. But the question is this, can this strategy take us far? Can this type of trading whereby we don't have a fixed risk to reward ratio, we are just say, okay, this is what market is going to give me, I will take it. This is what market is going to give me, I will take it. With that, we will not be able to have our trading curve, that's profitability and all of those, it will not come out very good, and it will not want to be a consistently profitable trader, because our focus is not just to make, maybe you make $100,000 this month, then the next following month you lose a lot of money, $1 million and all of those things. No, if you follow the rules and you go along with it, to be profitable in the long run is going to be guaranteed for you. So this is where greed comes in. Instead of you to make your 1 to 3 risk to reward and get out of the trade, you want to make what? You want to make a whole 1 to 7 risk to reward. But now look at this trade. You see, after we made our 1 to 3 risk to reward, then see what opportunity, what price did there again. See another opportunity. Price has already tapped into that zone. You see it. Then even before, from our previous study, that when an entry is given and we have another entry, before price take out that first entry target, it should tap into the second entry target, and this is what price did. You see, now price has tapped into this second entry target also, whereby the first entry has now hit second target. See what price is doing, and then This is just for an example. I didn't take this trade. This is what price is not doing. You see it? This is how it played out. Now we are now have what? 1 to 3 risk to reward. We have already made that trade. That's three trade. I mean 3 RRO, another 3 RRO. This is total of what? 6 RRO. Okay? 6 RRO trade by just following our strategy. Then imagine somebody taking this particular risk to reward from this place and taking it downward. Sometimes the market will just reverse against you. You can see what price is trying to do here. Price is trying to reverse before this entry and then was not targeted. Just imagine that when price reverse and then this trade goes out, your 3 RRO that you should have made, you will lose it to the market because you want to be greedy to want to trade from this high point to this low point, forgetting that when price give us our signal here, and price can use any reason to reverse. It can use probably this demand zone to reverse. It can also use the reason that it has already tapped into this 21 moving average to reverse upward also. So the market is very uncertain. The only way we can win in this market is to have our own strategy or formula with our risk to reward ratio fixed. Then the probability of winning is very, very much. Okay, because when I was doing the smart money concept, let me take you to my profile. So if you go to my profile on Instagram, you will see, let's look at this particular chart. Let's look at the chart category. You will see when I was making all this, you can see this is a trade of 12 RRO, 21 RRO. But if I tell you how many stress and waiting I have to go through for this trade to play out, you'll be surprised. This is plus 4 RRO, all those things. So it's kind of stressful. I'm not having consistent risk to reward. This is 11 RRO, all those things, 18 plus. But sometimes I have to be on the chart doing a lot of work, a lot. And by the time you calculate your risk to reward, your profit target at the end of the month, sometimes it doesn't add up. It's not consistent. Are you getting it? So that is why it's good to have a consistent risk to reward and all those. All right. Now let's come back to number 3, the last one, trading realities. The trading realities is this. There are a lot of people, they want to make a lot of money within a short space of time. It is possible, number one, it is not also possible. But the best way to make wealth, I say wealth, there are some people they want to make money, while some they want to make wealth. Okay? Now the best way to build wealth is in a gradual process and consistencies. Okay, look at this first scenario. Somebody is trading and they want to use all their money off, or they divide, maybe they have $10,000, they divide into 2 places. They will say, okay, I will put $5,000 on the first trade and then I will put $5,000 on the second trade with no direction, no margin, nothing. And before you see, they will either make little money or make some money for some time, but in the long run, they are going to lose all the money. But when you want to grow your wealth gradually and with consistency in your trade, you put a little from your total money you have. That little will generate more and more and more and more. And by the time you check your trading in a month or in a year and so on and so forth, you are going to be very much profitable. Now, there are a lot of things that will make people to be greedy and overambitious to trade. When you see the likes of people on social media posting their Lamborghini, posting all this on that, and you want to be like them, everybody want to be like such people, but the trading realities is very different. A lot of people are losing money in trading. Let me show you on status here. Okay, on the social media, there are a lot of these people, one is a forest with Lesica. When you see this type of profile, you see this person making 1,000 something plus, see their risk, all these things, but nobody will show you. Probably maybe they are running a demo account, this is wristwatch, showing all these things, showing off this how much, this is $47 million, but this person also want you to join their, their trading program, and then to come and pay money, probably all those things, and forest signals, all those things. Don't let all these things dissuade you. It's very good, it can motivate you, all these things can motivate, but If you don't have a strong mindset in your trading, this thing will sway you away and make you to make irrational decisions, and before you see, you'll be losing money while you are seeing these people winning and making money. The right question I just want to ask is, if these people are so profitable like the way they portray themselves, I'm not saying they are not profitable, but you see, let's say if you are making, if you can make 1% consistently in a month on any account, I'm telling you, you run these things for 12 months, that will be what, 12%? Now imagine you are making 3% in a month, then you run it for 12 months, that will be 3 times 12, and 3 times 12 is going to give us 36. You are making 36%. I'm telling you, if you can make consistent 1% for every month for 12 good months, then that's for a year. You can do this for 5 years or even for 3 years. You can do this for 3 years. I'm telling you, people are going to give you money to invest for them. Now that is with a lot of proof with this. Then if you are making 3% every month consistently, you can keep all this record for 3 good months. Even if you are trading demo accounts, you can keep the record for 3 good months, and you have, a whole year 36%. I'm telling you, you are going to have a lot of investors. A lot of people are going to be ready to invest with you. More money you are going to make. Now let's do the calculation. Maybe you have $1 million to trade. Okay, then you are making 1% in a month. 1% of $1 million is going to be $10,000. Okay, now with $10,000 in a month, that's going to be 10 times 12. That is, in a year you are making what, $120,000 from your $1 million. So in a year you would have made what? You would have made 12%, because by the time you check it, 12% of $1 million is $120,000. Okay, with the same $1 million, if you are having 3%, you are having 3% every month, 3%. Now 3% of $1 million in a year, in a month, this is going to be $30,000. Okay, $30,000. And we know in a year, 3% of 3% in a month in a year is going to be 3 times 4, 3 times 12, and that has already given us 36%. Now that's going to be 36 times what? Times $30,000. Okay, $30,000 with 36 times $30,000. This is going to be $360,000 in a year. Are you getting it? Because you are going to be making 36% in a year. Now, for every trade, for a trader, if you can make a consistent 3% in a month, you can do this for 3 good months. 3 years, and you keep the record. Probably using my FS book, all those things. You kept your record. You can show your track record, your trade you are taking, and you are making nothing less than, you can make above 30%. You can make above 3% in a month. But if you are just making a consistent 3% in a whole month for 3 good years, I'm telling you, if you take your record to anybody, they are going to give you a lot of money to trade. Imagine you are now having more than $1 million to trade with. Every month you are making more than $30,000, and then in a year you are making more than a quarter of a million. As time goes on, your capital will be growing up. Now, where the problem of our trading psychology is lack of funds. Because imagine you are using $100, and now somebody is telling you to raise 1%. What is 1% of $100? Is just $1. What you are getting is just $1. That means in a month you will be making only $1 with $100. And you are seeing somebody flipping just $10. Some people can flip $10 to $1,000 or to $10,000, all those things. Flipping cannot be consistent. Probably they are just being lucky. So the problem is lack of funds. But if you have a capital that, okay, let's say you now have $10,000 in your trading account, and you are making 1% of $10,000 in a month is what? It's going to be $100. Okay, you can scale this up little by little, little by little. We are talking about the worst scenario, because there are sometimes you can even make 10%. You can make 10% in a month, more than 10% in a month. But I'm saying, in the worst case scenario, that you make 1% or you make 3%, so on and so forth, if you can keep your record and show all these things to investors, people are ready to invest and you are going to make more money. There are a lot of countries that are in debt, billions and billions of debt. Now, I want you to, by yourself, look at it that if you are making 1% in a month, then maybe you are not given $1 billion to trade with, okay? $1 billion, whereby you are making just 1%. Are you getting it? Then they can even give you the $100 billion. Just be making 1% in a month. I'm telling you. That is where the real thing is. So the solution is to have more capital, but stick with the strategy, your risk reward, and then be confident with your trade and all those things. Because if you are making 1% and you can be sure of making 1% every month, you can pay off a lot of country debt. You're going to make very more money. This is all about trading psychology. Keep your trading intact. Don't let anything on social media to deceive you, because it will make you to lose your money. So stick with the strategy here. Everything, learn, and practice. Then trade and be confident that you are going to be very successful. All right.